time period from 2002 until the end of 2003. So, in fact, a full 2 years. And let's see what's happening here. I see a question. I'll get a question. In fact, let me ask the question right now. Might the fact that the US dollar is the de facto reserve currency affect this? Bruce, I think it might, absolutely. I love noticing these things in the market and making trading decisions on the basis of it, and talking to you about it. But reasons why cycles do what they do, I know is something that is best avoided. It's a fascinating subject, but I don't know what the reason is. But yes, absolutely, the fact that the US dollar is is reserve currency, and of course, we're looking at the American markets compared to the euro US dollar. There are obvious connections. There are simple obvious ones and also more complicated ones. But the same idea can be carried through to comparison of the American market with the South African market. Again, there are obvious comparisons there and reasons. South Africa relies tremendously on trade with America, imports and exports. And as a trader in South Africa, the first thing you do every day is you look and see what happened to the American markets overnight. So there are obvious direct connections, but that's a really fascinating discussion. But why cycles happen, I don't know. But certainly there are reasons, I believe. Let's have a look at what happened in 2002 to 2003 in the euro to US dollar. There's an 18-month cycle trough in February 2002. A 40-week cycle trough in October 2002, and in September 2003 a 20-week cycle trough. And now if we go to the S&P 500, we're looking at 2000. I think I've chosen the wrong time scale. 2002 to 2004. Well, I think you get the point from this, although it's a period excluded by the analysis. But here you can see that in the euro to US dollar, and let's just go back, we can just do it visually. In the euro to US dollar, February 2002 was the most prominent, the 18-month trough. Okay, then you're looking at October and September. Respectively, and here February 2002 there was probably a trough, but it was not a major trough. Then the October 2002 trough was a major trough in the American markets. As you know, some people do believe that this October 2002 trough was in fact a trough of a very major cycle, but the prevailing theory, I believe it would be correct to say, is that in fact the March 2003 trough was the really dominant trough. And then what happened in September of 2003? Well, there was a trough of the 40-week cycle. So I think you can see troughs are occurring around about the same time, often not on the same day, often 4 or 5 weeks apart from each other. And they have similar magnitudes, but often different magnitudes in different markets. And this is what I noticed repeatedly when I was living in South Africa and trading South African market. If I knew that a really major trough, or I believed a really major trough was forming in the American market, then I would expect to have either seen a really major trough having formed earlier in the South African market or later. And sadly, there doesn't seem to be any strong guideline as to the American market always leads, or the euro to US dollar always leads. Otherwise, of course, you just wait for a trough in the one market and then you trade the other market. But unfortunately, of course, it's not as direct as that. So just to sort of wrap up this part of the discussion, let's take a look at what has happened since 2009. In both of these markets. There we go. March 2009 up until today. Of course, as you know, I am of the opinion that a 4.5-year cycle trough did occur in October of 2011. I am wondering with some trepidation whether that trough is in fact going to turn out to be a straddled trough, which would be very bad news for everybody, because it means markets are going to rise in a fairly symmetrical fashion and then follow a fairly symmetrical path downwards. So we're looking at a very, very nasty move into 2015. That's a possible thing that might be happening. But let's compare this period to the euro to the US dollar, and so we go to the euro to the US dollar, and let's have a look at roughly the same sort of time span. What seems to have happened here is there we go. Roughly the same sort of time span is that again we have troughs that are displaced from each other, so the October trough in the euro to US dollar looks to be, according to this analysis, of only 80-day magnitude, and the 18-month cycle trough, as we've been discussing, occurred now in January, then in June there was a 4.5-year cycle trough, and of course in March the matching trough is of only 20-week magnitude, but the 18-month cycle trough occurred in October of 2008. So there is a fascinating analysis to be done in comparing the magnitudes of the different cycles as they are playing out in the different markets. What is my summary for all of this? I believe that the fact that the 18-month cycle trough has occurred now in January of 2012 implies two things, and it's a bit of a leap, but go with me here and you can see how you feel about this. I believe that it certainly makes me feel better about positioning the 54-month cycle trough in October, because between the October and January trough in the euro to US dollar there is only one 80-day cycle, and an 80-day cycle is shift that I think often happens between the euro to US dollar. If you go back and have a look at a lot of them, it's often either 20 weeks or 80 days is the shift, and so the fact that 80 days later, or one 80-day cycle later, we have the 18-month cycle in the euro to US dollar, I think provides some sort of confirming, it confirms that both of those troughs are likely to be of the sort of magnitudes that we're talking about, 18 months, 54 months. And the other thing, of course, let me just clear the whiteboard and zoom in, is that we're still expecting this American market to come down into a 20-week cycle trough. I don't know what's going on in America. Everybody's very optimistic. You're just refusing to let this market come down. Look at it. It's been forced into a really narrow band. And, of course, we're expecting a trough of the 20-week cycle. And so when was that January trough? That was the 13th of January. Is that the 13th of January? There we are there. That's the 13th of January. So there have been 18 days. And so now a trough at this magnitude of only 20 weeks, I think we could see certainly a 20 to a 40-day cycle shift. So in other words, I'm sort of expecting by the 20th of February, the American market to have come down and to have formed the 20-week cycle trough that we're expecting in an echo of that really strong euro-US dollar trough in January. I hope that makes sense. And so those are my thoughts about the euro to US dollar and a comparison of the analysis in the euro to US dollar versus the S&P 500. I do hope you found it interesting. What I've quite enjoyed doing recently with my analyses is to go to Hurst signals and see whether Hurst signals, which is an automated analysis system, agrees with my analysis. I find that quite interesting. So we'll sort of wrap up the session by taking a look at it. And oops, I've been clicking on the wrong things and pressing buttons and doing all kinds of things. There we go. And you can see that the analysis, the long-term analysis in Hurst signals is absolutely in line with the same analysis that I've been speaking about today, which is of no surprise because the analysis I've been speaking about today is the default sentient trader analysis that's being performed. And if we have a look at further and further detail, you can see the same thing is being said here in Hurst signals, that we're expecting the market to move down towards the end of the sort of 7th to the 10th of February. We're expecting the euro to US dollar to form a 20-day cycle peak. And it's quite possible that this peak that it formed earlier today was a peak of the 10-day cycle. As you can see there, we're expecting a trough of the 10-day cycle. We're expecting a trough of the 10-day cycle, and there's a question mark position there, which means that trough might have come in today. So I quite enjoy having a look at how this market comes down. Here is a fantastic a trade that came up earlier on Hurst signals, the 5-day cycle coming down, expecting of course the formation of the 10-day cycle trough sometime around about 8 a.m. this morning. And I think, as you can see, that trough formed at in fact we can probably see the time. Anyway, it formed just after 8 a.m. this morning, and there's a long trading opportunity on the 5-day cycle, and we can go and look in more and more detail. Of course, that's less appropriate to today's conversation, but nevertheless quite interesting. Let's see what the 5-hour cycle is doing. And there's the 5-hour cycle. Might have just peaked. We might be looking at a bit of a pullback. But there on the 5-hour cycle chart, you can see that long-term trough came in just after 8 o'clock this morning in the euro to US dollar. So that is all I have to say to you today about the euro to US dollar. If you have any questions, any comments about the analysis, any questions whatsoever, no matter how unrelated or off topic they might seem, I'd be very happy to answer any questions that you have. And thank you very much for your time today. And I look forward very much to seeing you again in 2 weeks' time for another trader chat, and next week for a signals chat if you're interested in Hurst signals and what Hurst signals are all about. Hurst signals are, of course, generated by sentient trader software, and they also use Hurst cyclic theory. So we will be talking about Hurst cyclic theory, cyclic analysis, and trading using cyclic principles. So I believe there are also really interesting, and you can get a lot out of them. So I look forward to seeing you there if you can join us. Otherwise, in 2 weeks' time at our next trader chat.